Hello and welcome to another strategy update or MicroStrategy strategy. The situation hasn't really changed from the last update, but I know it is a stock that is very popular due to the volatility and certainly interesting, absolutely. And I would still like to see another high. The question is, do we really see upside follow through as per the white scenario? And there is a slight change in the microstructure of the white scenario since the last update. Let me take you through it. Currently, the white scenario would be based on the idea that in March we formed a fourth wave low. We're now moving up in a fifth wave. And that's based on wave 1, wave 2, and then A, B, C in wave 3, wave 4, wave 5. That's how the roadmap would look like. Thesis would therefore be that circle wave 5 is an ending diagonal, which consists again of 5 subwaves. And yeah, best I can tell is, and that's, that's based on the microstructure, because this move up can be interpreted as 5 waves or 3 waves. This move up into the end of March high. Obviously, we had a corrective pullback. This move up, however, is really a clear 3-wave move. So I label that as the A wave of the third wave. So the current support, and I'm not telling you that the pullback has already started, but this is simply the support zone that needs to hold for the B wave pullback. And then from there, a C wave rally could start. So support is between $252 and $295 in the white scenario. And then from there, from that third wave high, fourth wave could start and the fifth wave. 2 new highs. So this is the white scenario. It's quite simple actually. It needs to hold $252. Any decisive break below 252 is likely going to lead to a more bearish scenario like the one shown in blue. Now the white scenario will formally get invalidated because the $252 level is not the invalidation point. That's a little lower. So that white scenario will be invalidated with a break below the red line at $236.50. A break below it would shift the focus to lower prices. In the blue scenario, potentially even, below $200, below $200 for a more extended wave 4. I don't like that idea, but it would be a larger A wave, a B wave bounce, and then a C wave down. There are a few other options that we could explore here, but main takeaway is, as long as the market holds above $252, we can give the white count, the rally to new highs, a chance. That still means that the price from here could give us a decent pullback. I mean, even this white A wave might get one more high before the B wave pullback starts. But the risk is rather on the downside right now, given how given how far away the $252 level is. And the next resistance is much closer, right, at $349. So I'd say pay attention to next resistance. It's also where the previous swing high was located, end of March, at around $349, $350. And overall, the next pullback could be an ABC structure in wave B if it's corrective. If the pullback is impulsive, we're dealing with a blue C wave to the downside. So the next pullback could be absolute key in determining which scenario is playing out. But because the market is only moving in corrective patterns up or down, I'm also exploring the idea of a triangle. So there are other options, that I don't necessarily talk about too much because we need to keep it actionable. And for now, there is a support zone I'm watching. Very clearly defined levels. That's the update about MicroStrategy. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership and check out our stocks and S&P 500 membership. You'll find the link in the description. Thank you very much. Bye-bye.